XRP has been a highly debated cryptocurrency with significant potential in the financial sector. Many investors and analysts have speculated on whether XRP could reach the $100 mark, and today, we'll dive deep into what it would take for that to happen. In this video, we'll explore recent news and developments surrounding XRP, the impact of institutional adoption, potential ETF approvals, and its role in banking integration. We'll also examine the risks and challenges that could stand in the way. Remember, while the potential is there, investing in crypto carries risks, so always do your own research and invest responsibly. Now let's get into it. The crypto space moves fast, and XRP has been at the center of a lot of major developments. Here are some of the biggest updates. The SEC versus Ripple case has been a major talking point. Recently, the SEC removed its civil lawsuit against Ripple from its website. While this doesn't mean the case is over, it does suggest that legal pressure might be easing. Meanwhile, Japanese banks are embracing XRP for global payments, with reports indicating that 80% of banks in Japan will be adopting it by 2025. Japan has been at the forefront of cryptocurrency adoption, and if this move happens as expected, it would validate XRP's real-world utility. Another key development is Ripple's integration with SWIFT, the backbone of global banking, handling over $150 trillion in transactions yearly. SWIFT is modernizing its system, and Ripple's involvement signals its growing relevance in the traditional finance world. These three factors alone could significantly impact XRP's future, but there's still more happening behind the scenes that could push its adoption even further. One of the most exciting possibilities for XRP's growth is the potential approval of an XRP exchange-traded fund, ETF. ETFs are financial instruments that allow investors to gain exposure to an asset without having to own it directly. Bitcoin saw a surge in price after its ETF approval, and many believe XRP could experience a similar effect. If major financial institutions launch an XRP ETF, it could open the floodgates to institutional investment. This would allow pension funds, mutual funds, and everyday investors to gain exposure to XRP through traditional brokerage accounts. However, an ETF approval doesn't guarantee a price explosion. Ethereum recently had an ETF approved, but its price movement remained relatively flat. The key question is whether institutions will see XRP as an attractive asset class in the same way they see Bitcoin. If an XRP ETF is approved, it could be a catalyst for broader adoption, especially among investors who prefer the security of traditional financial markets. But it's crucial to manage expectations. An ETF is not a silver bullet, and other factors will influence XRP's price trajectory. The XRP ledger, XRPL, is one of the most advanced blockchain networks built for speed and efficiency. Unlike traditional blockchains like Bitcoin and Ethereum, which struggle with transaction speed and fees, XRPL is capable of handling 1,500 transactions per second with fees as low as 0.00002 XRP per transaction. A key feature of XRPL is its built-in decentralized exchange, DEX, allowing users to trade assets directly on the ledger. This capability could be a game-changer as decentralized finance, DeFi, continues to gain traction. Ripple is also launching RealUSD, RLUSD, a stablecoin pegged to the US dollar. Stablecoins play a critical role in the crypto ecosystem by providing a stable store of value and facilitating smooth transactions. If RLUSD gains traction, it could increase liquidity on the XRP ledger and drive further adoption. The combination of XRP ledger's speed, DEX capabilities, and RealUSD's stability creates a strong foundation for XRP's long-term success. But its adoption will depend on whether financial institutions and developers see it as a viable alternative to existing solutions. Institutional adoption is key to XRP's long-term success. One of its biggest advantages is its compliance with ISO 20022, the global financial messaging standard. This allows banks to integrate XRP into their existing payment systems without requiring extensive modifications, potentially capturing a share of the $150 trillion payments market. With increasing regulatory clarity, banks and financial institutions are now more open to exploring crypto assets for cross-border payments. Ripple's technology offers an efficient alternative to traditional banking systems, reducing transaction costs and settlement times. If more banks adopt XRP as a bridge currency, its demand could skyrocket. Additionally, recent regulatory changes in the U.S. mean that banks can now custody crypto assets, making it easier for financial institutions to hold and transact in XRP. This opens the door for wider adoption, as banks can securely store and manage digital assets for their clients. Another major development is Ripple's partnerships with global financial institutions. Several banks have already begun using RippleNet, and further adoption could cement XRP's role in the financial ecosystem. If major central banks integrate Ripple's technology, it could significantly boost XRP's market value. Finally, Ripple's on-demand liquidity, ODL service is gaining traction. By leveraging XRP, ODL enables instant cross-border payments without the need for pre-funded accounts. This reduces capital costs for financial institutions and improves liquidity. As more companies adopt ODL, demand for XRP could grow substantially. Reaching $100 per XRP is an ambitious goal, but what would it actually take? The market cap of XRP would need to hit approximately $5.70 trillion, more than triple Bitcoin's current market cap. That's a huge number, but not impossible if institutions and governments fully adopt XRP. Many analysts believe Bitcoin could reach $1 million per coin by 2030, which would bring its market cap to $20 trillion. If XRP maintains its current market dominance of around 4.5%, its price could reach $22 to $25 per coin. While this would be a huge increase from today's prices, it still falls short of $100. For XRP to hit $100, we would need to see widespread institutional and government adoption. If sovereign wealth funds, global banks, and multinational corporations start holding XRP as a reserve asset, then a $5.7 trillion market cap could become a reality. Another factor that could push XRP's price higher is tokenization. If major financial assets, such as bonds and stocks, are tokenized on the XRP ledger, it could unlock trillions of dollars in new value. The concept of tokenized finance is gaining traction, and Ripple is actively positioning itself to be a leader in this space. Ultimately, XRP's path to $100 is uncertain. While the potential is there, it depends on major shifts in the financial system, regulatory approvals, and real-world adoption at a massive scale. Despite its strong potential, XRP faces several key risks and challenges that could impact its adoption, price trajectory, and long-term success. Understanding these risks is crucial for anyone considering investing in XRP or following its developments in the crypto and financial space. Regulatory uncertainty. One of the biggest challenges facing XRP is regulatory clarity. The cryptocurrency market as a whole remains under intense scrutiny from governments and financial regulators. XRP's battle with the SEC over whether it should be classified as a security has been a lingering concern, as negative rulings could limit its use within the United States and other major financial markets. Even if XRP wins its case, regulatory bodies worldwide may introduce new rules that impact its usability and adoption. Institutional reluctance. Even though banks and financial institutions are gradually warming up to cryptocurrency, many remain hesitant to integrate XRP due to legal uncertainties, volatility, and concerns over decentralization. Traditional financial systems are heavily regulated, and many institutions prefer stable, government-backed solutions rather than relying on decentralized digital assets like XRP. If major banks do not adopt XRP on a large scale, its role in the payments industry could be diminished. Competition from other cryptocurrencies. XRP is not the only cryptocurrency aiming to revolutionize cross-border payments. Competitors like Stellar, XLM, which was created by a Ripple co-founder, as well as other blockchain solutions like Swift's evolving digital payment technology, pose significant competition. Additionally, central bank digital currencies, CBDCs, could become a preferred alternative for cross-border transactions, reducing demand for XRP. Market volatility and speculation. XRP, like other cryptocurrencies, is highly volatile. Sudden price fluctuations can deter institutional adoption, as businesses and banks prefer stable assets for transactions. Additionally, speculative trading significantly influences XRP's price movements, meaning it could rise or fall sharply based on market sentiment, rather than actual adoption and utility. This unpredictability makes it a risky investment, especially for those looking for long-term stability, decentralization concerns, and blockchain reliability. While Ripple claims XRP is decentralized, critics argue that Ripple Labs still holds a significant amount of XRP, giving it substantial control over the supply. This has raised concerns about centralization and trust in the network. Additionally, the XRP ledger has experienced technical issues, such as a temporary ledger halt, which raised questions about its reliability. If such incidents become frequent, it could weaken confidence in the technology and discourage further adoption. Liquidity and exchange risks. XRP has been delisted from major exchanges in the past due to regulatory concerns, making it difficult for traders to buy or sell the asset. If more exchanges follow suit, XRP could suffer from liquidity issues, making it harder for both retail and institutional investors to enter and exit positions. Low liquidity could also make XRP more susceptible to price manipulation by large holders, commonly known as whales. Adoption barriers and infrastructure limitations. While RippleNet and XRP's on-demand liquidity (ODL) services offer advantages over traditional financial networks, they still require widespread infrastructure adoption. Many financial institutions already have entrenched systems and may be reluctant to shift to new technology. Integrating XRP-based solutions can be costly and time-consuming, slowing adoption rates. Additionally, the lack of widespread merchant adoption limits XRP's usability in everyday transactions. Legal risks from future government policies. Governments worldwide are still debating how to regulate cryptocurrencies. Some countries have banned or heavily restricted crypto trading, while others are embracing blockchain technology. If major economies like the US or EU introduce stricter policies against cryptocurrencies, it could hinder XRP's adoption in financial markets. Moreover, if XRP is classified differently in various countries, international transactions could face regulatory roadblocks. The unpredictability of technological advancements. The blockchain and financial technology sectors are evolving rapidly. While XRP currently has an edge in speed and efficiency, newer, more advanced technologies could emerge and make XRP obsolete. Future developments in AI-driven financial solutions, alternative blockchain payment protocols, or even traditional banking innovations could reduce the need for XRP in cross-border payments. To remain competitive, XRP must continuously innovate and adapt to changing market needs. Security threats and network vulnerabilities. Like any digital asset, XRP faces risks from cyber attacks, network vulnerabilities, and potential security breaches. While blockchain technology is generally secure, attacks on exchanges, wallets, and smart contract integrations could expose XRP holders to theft or loss. If XRP's infrastructure suffers a major security breach, investor confidence could plummet, negatively impacting its adoption and value. XRP's potential is undeniable. With increasing institutional adoption, banking integration, and regulatory clarity, the groundwork for future growth is being laid. However, significant challenges remain, including regulatory hurdles, competition, and technological risks. For XRP to hit $100, it will require mass adoption on a global scale, with financial institutions, governments, and retail investors all participating. While it may not happen overnight, the developments we've discussed suggest that XRP is on the right path. As always, remember that cryptocurrency investments come with risks. Make sure you conduct thorough research and build a diversified portfolio. If you found this video helpful, don't forget to like, subscribe, and leave your thoughts in the comments below. Thanks for watching, and I'll see you in the next one.